And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. It's time for the Market Prep, Wednesday, February the 1st. I feel like we're already halfway through winter. It's about 6 degrees here in Chicago. Hopefully it's warmer where you are, and if you're already in the markets, hopefully things are going your way. But as always, our focus here is on finding accurate context, good risk management, and remaining patient and centered in our trading. My name is John Hoagland. Thanks for trusting me with your time. I was going to open with a hopeful thought for Dan and his brother. Dan has already posted in the chat here that things went very well for his brother yesterday. Better than expected. That's what we were all praying for, is the best of possible outcomes. Already on the road to recovery. So that's great news, Dan. We're happy for you and for your brother and for your whole family. That's great news. This morning, we know we've got the FOMC meeting today, so that tends to keep the markets in a hurry up and wait kind of market state. But as always, anything can happen. We're going to trade what we see today, and we're always going to protect ourselves with stops. Stops. Always protect yourself with stops. So this morning, the ADP employment number came out. There was the non-farm ADP employment. They were looking for 178,000 additional jobs. It came out 106,000 additional jobs. So the job situation slowing, and I think that's what the Fed is looking for to some degree. 8:45, we've got the PMI manufacturing final. 9 o'clock, probably our more important numbers this morning, other than the FOMC release. ISM Manufacturing Index, Construction Spending and Job Opens Labor Turnover Survey. 9:30, the EIA Petroleum Status Report is due out. They're looking for just a mere 376,000 barrel boost in the last week, where the API released yesterday an additional 6,300,000 barrels in crude stocks here in the U.S. So it's anybody's guess as to how that EIA number is going to come out as usual. 1 o'clock, of course, the FOMC rate announcement. Everybody is expecting a 25 basis point rise in rates. And then, of course, 1:30, the Fed chair presser. We will be in Make Hogue Money. We'll be in group coaching at 1 o'clock. The link to get into group coaching is right there. Looking forward to seeing you all there. And then, of course, we have Make Hogue Money at 2 o'clock. The second link is to get into the Zoom meeting. Of course, you can watch it on YouTube. But if you want to get in and vote or even speak in the Make Hogue Money, you're going to have to get into the Zoom meeting. There are the links. As far as stocks, looking like we're going to open sharply steady, a little bit lower. Of course, waiting the economic numbers, and three major indices have officially closed the month of January positive. That's a good thing. FOMC, again, is expected to raise rates by 25 basis points, but are they still going to attempt to appear hawkish? They don't want to be swayed by recent developments and plan to keep at it, as they're saying, in reducing inflationary pressures. As far as earnings this morning, Novo Nordisk, T-Mobile with mixed numbers, Waste Management missing on both, and Humana also with mixed results. We are waiting at the end of the day for Meta, Facebook, MetLife, and Aflac. The VIX this morning up just a little bit, 1956, still below that 20 level. The dollar index off a little bit, back down below 102 at 101.79 last I checked. The yield on the 10-year slipping lower this morning, back down below 3.5 at 3.48. Lacey's over here saying good morning to everybody. She's demanding to be pet, so I'm multitasking already this morning. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling. They're all welcome, as well as love here on the Market Prep. And subscribe to our YouTube channel so you get notifications when we do go live. Good morning, everyone. I've got Shaw first in the room winning the prize this morning. Caprice 101, Bear goes long. Jason, good morning. Bear goes long, saying today is an excellent day to observe the market. And I think as much as I enjoy what I do, I think it's important, even if you're not going to participate, to sit and observe what happens throughout the day today. Everything we can learn about these markets, and even more importantly about ourselves, is going to hopefully benefit us to greater success at some point in the future. Theo, good morning. Sean, Razmek, Terry King, Haggle Matters, Kevin, good morning. Charles March, Dan Trader, Vince, my guy. Dan Trader, again, so happy that things have worked out well yesterday and that you're back here with us today. Naveen, good morning. Scott Saw, my brother Rick, love you. Michael, good morning. Jay Gilmo, the Andrews Pitchfork was good. Used it this morning for a winning trade. Nice job. Nice job. That's excellent. I've been kind of putting it on my charts and moving it around a little bit to see what I can figure out to use that to of course my advantage. France, it's good. Good morning. I haven't seen you in a while. It's good to see you. Will, good morning and good luck. Guess we'll see how successful bullying the Fed goes. Yeah, right. Good morning, Fred Decker. Good to see you this morning. Rusty Golfer, Paul Besweed, Jason, -2 in Wisconsin. My brother's up in Wisconsin too, Jason. We've just spent a lot of time up there. JT, good morning, Fred again. Rusty Golfer, 80s here in Florida. Yeah, I guess Florida is the only place in the country that is actually experiencing some nice warm weather. Good to yes, everybody's saying that drop then pop or pop then drop. Kevin, who knows, right? Andy Bleed, good morning. Rob T, Jason Lewis, JD. Opening extension before a big sell, but DYOR, do you opening range? Is that what that means? I'm not sure, JD. Naztic, Philip, Jan, Travis, good morning. Anissa, good morning. Sarah Hall, good morning. Sarah, prayers and love to you as well. Naztic saying good morning to Lacey. Oh, she just went and laid in the sun now. She's nice and toasty warm. Stephen, Columbus, GT, Paul, good morning. Walworth County, Wisconsin is beautiful. Hey, that's where we've spent a lot of time there. Alejandro, morning all. Last but not least, no, not least. So we're going to take a look at these charts this morning. The S&Ps yesterday was do your own research. There you go. Always good. Yep. Balmy 5 Fahrenheit now. Wow, let's see, it's about where we are, Rick. We're up to 7. Can't leave the dogs out very long in this kind of weather. You got to get them to take care of business and get back inside. Lacey was out there for just a couple of minutes and taking care of business and picking her feet up, and so we got her in here and nice and warm and toasty now. So. All right, the S&Ps yesterday, I thought were a fascinating study of Delta. We're going to take a look at this and show you as much as I can about how the trade played out yesterday in the S&Ps. And it also indicates popsicles. It also kind of indicates an increase in positioning in longer time frame. But remember, when there's a longer time frame position adjustment in the futures, they're selling somewhere else. They're selling something else. So it's all goes along with my theory that as day traders, we are trying to pit time frame against time frame, understanding when our time frame, our short time frame pea shooters are stuck one way, we can take advantage of that. Seems mean, but hey, they need to get out anyway, right? Let's take a look. We're going to start, as always, with the daily in the S&Ps. Let's get things going here. All right. Upside structure remains. Yesterday, let's do this right here. This is the daily chart. Look at where that 200 session moving average came in. Pretty much put in our low yesterday. We've got a lot of excess on this daily chart here. This long shadow represents, again, excess. Price getting too cheap, sellers not selling anymore, buyers coming in and taking over. And boy, did they yesterday. We added 13,000 estimated new contracts in open interest yesterday. That's an accumulation in some time frame of new longs in this product. Anything can happen, of course. We know that we've got a lot going on today. Taking a look at the 30-minute chart. The low of the regular trading hour session is the low of the initial balance. The market started moving higher and ground higher all day long until, what did we do at the end of the day? We put in a late spike. What I want you to notice is initially there was some positive delta on the way up, but as the day went on, there were periods of time when delta got very negative. You could practically see it on this volume profile chart. Longer time frame buyers used ICE orders to accumulate longs at this level. Then they moved it up to this level. Then they moved it up to this level. Moved it up to this level, and by the end of the day, the longer time frame buyers had the short time frame day traders so short that they had to cover those positions by the end of the day, which creates this late spike to the upside. Look at all the volume that occurred all the way up, and look at where the high volume node or the point of control, volume point of control from the entire session was all the way at the high here. That is huge volume, and that is short time frame traders jumping over each other to get out of those short positions. Now, this late spike does have some meaning to it, as I'm sure most of us are well aware. Where is the market now? Well, we are basically all night trading inside the late spike. With the late spike rules, if we were to open flat out above the high of the late spike, that's the highest probability of acceptance of higher pricing. Opening in the late spike is secondary to the higher probability of opening with acceptance of higher pricing. Opening below the base of the late spike, or even below where the late spike begins, would be excess rejection of higher pricing. So where it looks now, we've been in the late spike basically all night. We're looking like we may be opening below the base of the late spike, which isn't a good sign for longs. The longer time frame traders that accumulated these longs in the S&Ps and in the NASDAQ yesterday, they were selling somewhere else. They're always hedging. Where we could benefit from that was recognizing that they were in the market, not trying to get short, trying to find a way to get in with the longer time frame, and then waiting until our time frame, which we know was too short, capitulated at the end of the day to get out. Okay? So, by the end of the day yesterday, where we had seen negative delta around 5,000, 6,000, 7,000, 8,000 at times, the end of the day delta was minus 484. all of the negative delta had been taken apart and removed by the time we put in the high and closed this market yesterday. It's almost too perfect. Almost too perfect. Doesn't make it easy to trade, but it gives you that context. It gives you that idea that we've got somebody else in this market. This is not just, speculators. These are longer time frame buyers using ICE orders to accumulate longs all the way up. Then we get the capitulation. Doesn't mean that they're naked long. They're hedged somewhere else, and there's a lot of hedging going on before the FOMC meeting. Let's take a look at the TPO chart now. So if you were to look at this as a profile, you would say this was a normal variation trading day. But when you split it out like this, obviously it's more like a trend day. It was a slow grinding trend day, which to me is the most solid. There wasn't a lot of single TPOs left. We do have a couple of anomalies that don't necessarily smack for confidence on the way up. So the base of the late spike is right here. It's 40.75. We're going to probably open in that area. So that's going to complicate things. But with the FOMC meeting, I'm going to try and be patient. I think it may be one of those hurry up and wait kind of days. Maybe the 8:45, 9 o'clock numbers will do something. And then after that, it's just kind of freewheeling here until 1 o'clock Central when the FOMC release comes out. So normal variation day with a trend to it. Late spike rules, again, in opening in the late spike, secondary acceptance of higher pricing. Flat out above it, which doesn't look like it's going to happen, is the biggest probability of acceptance of higher pricing. But open below the base of the late spike, this then becomes or looks like excess, and we may be rejecting those higher prices. The reason the late spike is so important is price moved to a new level seeking balance. If it does not find balance in the opening on the next day, if it opens below it, it's rejecting the fact that the market was unable to find balance above and accepting higher prices, and a move to the downside could be in order. Again, yesterday's buyers in these equity futures were longer time frame, but doesn't mean that they're holding naked longs. They're always hedging somewhere else. Take a look at crude oil now. Nice excess on this daily bar. Okay, we got that long shadow down there. We added an estimated 15,000 more in open interest on this push to the upside, back above weekly kickoff low. We're still testing that level. Open interest is continuing to increase since the beginning of the year. Since the beginning of January, crude oil has added an additional 287,000 contracts just this year. That's a pretty substantial number. If you'll pardon the pun, there is a lot of energy in this market, and when it finds direction, it's going to go. I don't think it's found it necessarily here just yet. Taking a look at the 30-minute chart, no overnight inventory really. Where are we? We're inside range and value from yesterday. We have a P-shaped profile, which would indicate short covering, but that short covering was assisted by an increase in the number of contracts. Buyers came in and made long bets as shorts were covering. So we don't really have a whole bunch of overnight inventory. We're in range and value. I'm going to suggest trying to stay patient. What did we do as far as Delta is concerned yesterday? The price moved higher. The increase in negativity indicating in open interest an accumulation of new longs. And the way the crude oil is traded every month for 10 years into the future, there is a huge number of there's a huge amount of hedging that goes on in this market. It makes it a little bit more difficult to use open interest in this way. But we have excess off the low from yesterday, excess here. We're holding in value. We're holding weekly kickoff low. There's opportunity here. I'm just going to stay patient because of the EIA petroleum status report today. Take a look at the TPO chart. Teo, good morning. Jenny, Rooster, good morning. So excess on the low, just short covering meets new longs here. Got a nice ledge at the top here. More excess on the low than on the high. If we can hold weekly kickoff low, which is 78.65, which look at where we are now and look at where our overnight low is, 67. If we can hold this low, maybe you get a little bit of repair down here, but if we can find some buyers here, we can see this market move higher. Relatively weak high all the way up here. This will come into play at some time. Not today, probably, but we're in an important inflection level here. We may go back and take a look at this at the end of the session here. Now, okay, NASDAQ. Upside structure still remains. We added 8,000 contracts yesterday in new business, new buyers coming in. The market, where I think was the NASDAQ was the follower yesterday. We never had negative delta, but the market just continued to follow the S&Ps higher. It's at a higher level technically, but I don't think it performed as well yesterday. We see that excess at the end of at the low of the daily bar here. Take a look at the 30-minute chart. We got the late spike again early this morning. It looked like we may even open above the base of above the late spike, but that has now fallen. We've got a little bit deeper move into the value from yesterday, below the base of the late spike in the overnight session. But again, the base of the late spike here, 12,126, 12,126. So we open in the late spike. Just opening in there has the nuance of acceptance of higher pricing, just because the market has allowed itself to stay in that area. We did not have the delta divergence until the very end of the day yesterday. The very end of the day, we actually had more aggressive sellers as our shorter time frame buyers moved price up. This I'm finding very interesting because there may have been some bigger speculators involved in this in the NASDAQ yesterday that liquidated the longs that they'd accumulated on the way up. We didn't put that point of control as high as we did in the S&Ps, but the negative delta on this bar was what ended up making the delta negative at the end of the day. So we had a lot of buyers coming into this market. You would think that would increase positive delta, but it made the market, it made the end of day negative. I'm finding that to be very interesting. Take a look at the TPO chart here. So overnight weak high and weak low. Again, normal variation, neutral day if you look at the point of control. But when you split it out, it looks more like a trend day, right? Higher lows, higher highs, closing at the high of the day. So again, the base of the late spike here, again, exactly 12,126. Where we open is going to be directly related to how I'm going to respond to this day. If we hold the base of the late spike, maybe there's some upside opportunity. If we can't hold the base of the late spike, there may be some opportunity to the downside. But on top of all of that, I'm reminding myself it's FOMC day. Stay patient. Don't want to get too involved in anything too soon. It's maybe one of those hurry up and wait kind of days. Gold. Wow, look at that excess. We lost 1,000 overall in open interest, but looking a little deeper into it, our front month added 3,000. The February month, the expiring month, lost 6,000. Well, that's just people getting out of that February contract. So overall, in the April contract, again, adding 3,000 makes me believe we had some buyers coming into this market. Look at all the long shadows here. Look at the long shadow here. It really looks and feels like there is some buying coming into this market over a series of days and a couple of weeks. It doesn't help that we've lost open interest the last 3 days, but again, that can be a function of rollover. As the February contract gets closer to expiration, people are liquidating positions there. Take a look at the 30-minute. No real overnight inventory, kind of opening in range and value, looking like we are possibly looking to continue this move to the upside. End of day, we had a little bit of negative delta, so that would be a divergence. Maybe some longer time frame buyers coming into the April market, April month. We're back in range, back in value, showing rejection of the lower extreme yesterday. A rotation higher seems to make sense, but again, anything can happen, and we have to trade, of course, what we see. The TPO chart, normal variation trading day, extreme, weak high, excess low, excess low, excess low, excess low, excess low, excess low. Low excess high, low excess high. Exactness is a weakness. We certainly could watch the dollar see a rotation higher in gold. Just how it looks to me. Here's the euro, that excess below the extreme low of the area of balance. We're back in it. It's already trying to rotate to the high of the area of balance here. It's not waiting for me. It's just going. We lost open interest a little bit here yesterday, maybe some short covering, but we're still an upside structure. We have the 30-minute chart here. Okay, opening with a gap. It doesn't look like we got much of a chance to go close the gap, but as we get closer to the upper extreme of balance, it may offer us opportunity. I'm not going to fight this move. I'm done fighting directional moves. If it sets up some sort of structure I can lean on, then I can take a look at something in the opposite direction. But this looks pretty strong. And whenever I say that, I always put in the high. Keep that in mind. So, overnight inventory was long, but without the gap close, there's only one thing for us to do, and that's to look for longs. And I don't really want to buy it up here. I'd rather be patient, wait for it to give me some structure up near the upper extreme of balance so I can limit my risk. I feel like I've got a lot of risk if I'm trying to get into this market here. Here's something interesting for you. This is the session from yesterday. Normal variation trading day, very wide in the center. So the market is probably seeking new areas to facilitate trade, which is exactly what it's doing. The one thing that makes me a bit nervous is we've got a weak low here, we've got a poor low here. The market did not finish the downside auction. That may come into play when it comes into play. Is it important? It's important to note if the market comes heading back down towards that direction. Here's the 10-year. 10-year has been very range-bound, rejecting below last week's low a couple of times already this week. Centrally located. It makes sense to be centrally located with the FOMC meeting coming out today and our change coming into the rates. Short time frame controlled, losing 44,000 contracts in open interest yesterday, positioning and hedging. people are positioning and hedging for today. We've got a little bit of a gap here. I don't think we were able to close the gap, so we're still looking for longs. Plenty of visuals up here. I haven't put these points of control up here, but they'll be on the TPO chart. Weak low yesterday. That's a poor low. E period, one tick below D period, but this market does that a lot. We have excess down here. What are we looking at as far as eyes to bring us to on the upside? Already taking us to these points of control, another set of points of control up here to look at, excess on the low. But again, all of this is sort of random. It's sort of short time frame controlled and difficult to find the right short time frame level with which to look at. And we'll give a quick look here to the natural gas, which had 2 days, 3 days, 4 days of indecision, looking more like we may see some continuation to the downside today. We added 3,600 in open interest yesterday, 6,300, in open interest yesterday on a really kind of a normal, quiet trading day. Here's the 30-minute chart. Just rotational, adding all that open interest. There's energy here, again, if you'll pardon the pun. We didn't really have any overnight inventory until now. We got a little bit of overnight inventory to the short side, but we seem to be rejecting range from yesterday. There's a lot of space down below here. Take a look at the TPO chart. Normal trading day, normal variation. Initial balance, the low of the regular trading hour session yesterday. A weird profile, lots of ledges. Short time frame traders tend to fade these until they don't get paid anymore. Be interesting to see how this day plays out. I'm going to be looking forward to seeing everybody on the market reflection today, not to mention group coaching, as well as Make Hogue Money, the afternoon session. Okay. So, happy FOMC day, ladies and gentlemen. Dan Trader again, thank you for letting us know, and God bless. We will see you at 12:30 for group coaching, 2 o'clock, Make Hogue Money, and then at the end of the day for the market reflection. So I will let you go today, and be careful. Trade what you see, protect yourselves. It may just be kind of a hurry up and wait kind of a day, but again, ACH, anything can happen. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Get out there and profit. We will check in with you later on. And again, have a great trading day. Patience, protection, profit. Have a good one.